Saudi Arabia threatens to flood the market with oil to regain control of market, in a move that could wreck Russia's fragile economy even further. The kingdom has signaled that they will no longer commit to output restrictions agreed by OPEC. Oil prices could drop to $50 per barrel as the so-called cheaters in OPEC have not kept to the agreed production limits imposed to keep prices high. Saudi Arabia's energy minister, Abdulaziz bin Salman, representing Crown Prince of Saudi Arabia, spoke recently of the possibility of ending the cartel's quotas and pump as much as they like. Saudi oil is far cheaper to produce than Russia's, and Brent crude is more desirable than Russia's Urals. Russia in particular has been pumping oil regardless of the limits, and was known to have produced 122.000 per day over its daily limit in July. That they promised the limits would be kept to, but Putin is not known to keep any agreements. In recent weeks, Iran launched missiles at Israel, and oil prices increased after weeks of steady decline. The price of Brent crude oil rose by 5%, eventually stabilizing 2.4% higher, just below $70 per barrel. It was expected that the Middle East war could disrupt oil exports in the Persian Gulf, leading to price increases. However, geopolitical tensions have persisted for months without significantly impacting oil prices, frustrating Saudi officials. This is partly due to other cartel members not following production cut plans for most of this year. During a phone conference last week, the Saudi energy minister warned other producers that prices could fall to $50 per barrel if they don't comply with agreed production cuts. He also highlighted Iraq, which exceeded quotas by 400,000 barrels per day in August, and Kazakhstan, which plans to increase production as the Tengiz oil field, producing 720,000 barrels per day, resumes operations. According to one of the delegates present at the conference, the Saudi energy minister said there is no point in adding more barrels if there is no space for them on the market. Analysts at Citigroup have predicted the oil price falling dramatically regardless of KSA, even to as low as $30 per barrel. An increase in production of Saudi's Brent crude could easily end all Russia's wild ambitions to win a war in Ukraine for good, if and when the end of the current deal goes ahead. In another shock statement, Bloomberg said this week that global oil markets face a surplus of more than 1 million barrels a day next year. Chinese demand continues to falter. This was reported to them by International Energy Agency. Oil consumption in China, the powerhouse of world markets for the past 2 decades, has contracted for 6 straight months and will grow this year at just 10% of the rate seen in 2023. The global glut will be even bigger when Saudi Arabia decides to press on with plans to revive halted production. With the election of Trump and his catchphrase of "drill baby drill," it will surely destroy Putin's economy and his ability to continue his war. As if things weren't bad enough for Putin, Russia's oil revenues in October 2024 declined by 29% compared to the same period in 2023 due to lower global oil prices and domestic subsidies. At least 3 Russian refineries have halted processing or cut output due to heavy losses amid export restrictions, rising oil prices, and high borrowing costs. 3 factories, Tuapsin, Ilsky, and Novosakhtin, have suspended or reduced production in recent months. The closure of refineries indicates the problems of the Russian oil refining industry. Factories are being attacked by Ukrainian drones, and industry is suffering from Western sanctions against Russia, so refiners are forced to sell fuel at a discount. The lower oil prices and subsidies negatively impacted Russia's budget, which heavily relies on oil and gas revenues. In October, international oil prices and the price of Russia's flagship crude, Urals, slumped compared to the same month of 2023. This eroded Russian revenues as the price of the Urals grade averaged $63.57 a barrel, compared to $83.18 a barrel in October last year. The revenues from oil for the state were also impacted by the government subsidy they paid to local refiners. Crude processing companies received in October the so-called damper payments, a form of subsidy to producers to encourage them to sell their refined petroleum products in Russia instead of exporting these for a higher price. Last year in October, Russia didn't pay such incentives to its refiners. So, per Bloomberg's calculations, the Russian budget received last month a total of $10.8 billion, 1.05 trillion Russian rubles, from oil, down by 29% from a year earlier. To add to this, Russia's looming economic catastrophe is coming ever closer as the ruble collapses, and its dependency on oil revenues will prove disastrous for the regime in the Kremlin. If Brent crude oil prices fall to less than $60 per barrel, they will not be returning to a higher price for years, as world production will exceed consumption for a long time. The World Bank predicts a significant oil oversupply in the coming years, leading to a potential drop in oil prices below $60 per barrel, and Trump will ensure the oil price collapses to please his blue-collar voters. Meanwhile, Urals Oil, Russia's own, always sells at a discount of around $5 less, and break-even price Russia needs to sell at is considered $75 per barrel, way higher than a price they can achieve. Meanwhile, KSA has no such worries. Putin has dictated to his government that defense spending must increase by 25%, making sure that Russian people continue to have miserable lives. The election of Trump and his plan to drill baby drill, which is already making USA the world's #1 producer, will only add to Putin's misery, but will also help Ukraine, Europe and the world rid itself of a tyrant. Thank you for watching my short update video. Please like and subscribe if you can. My channel has only been running 1 month, so I would appreciate your support. Bye for now.